Welcome to the Weekly Option, the podcast for people interested in trading stock options. Each week, we cover trade ideas and opportunities in the stock market right now. Whether you're a beginner, a professional, or just curious about options, this is the show for you. Let's get started. Welcome to the Weekly Option. This is episode 339 on September the 7th, 2024. I'm your host, Eric, and in this week's show, we'll cover the trades from last week on AST SpaceMobile, VF Corp, and the VanEck Vectors Gold Miners ETF, and we discuss three new trades on NIO Inc, C3AI Inc, and Delta Airlines. Now, it's always great to hear from listeners. If you have any questions about the trades presented here on the show or even about your own positions, feel free to email me. You can email questions to eric@theweeklyoption.com. That's ERIC@theweeklyoption.com. I've also created a few videos to teach you all the basics of option trading that you'll need to know to be able to follow along with me on this show. You can visit our website and click on the videos tab to watch them, or visit the YouTube channel for the Weekly Option. Now, we saw a few big moves in the market this week. The Dow Jones Industrial Average fell 1,217 points, closing at 40,345 points on Friday. The S&P 500 index lost 240 points, ending the week at 5,408 points. And now it's time for the topic of the week. The topic of the week is adding more tools to the tool belt. Now, over the years, I've spoken with several people, dozens of people who focus on one type of trade. Maybe they feel comfortable selling spreads. One person told me they understood trading calls and needed a little bit more help learning to trade put options. If you only know one strategy, then you're bound to lose money when the market changes. Some trades work well when the market moves a lot. Some strategies work well when the market hardly moves at all. If you want to become successful in trading options, whether the market is going up or down or not moving much at all, you have to understand options enough to be able to use multiple strategies, or at least alter the strategies you've been using to make money in whatever current market environment there is. Have you ever heard the phrase, bringing a knife to a gunfight? That's what happens when your one strategy gets outmatched by the market. Now, when you fully understand options and have multiple strategies to choose from, now you're bringing a gun to a knife fight. That's a much better scenario. The only way that I've continued to improve over the last 20 years is to continue to learn and better understand all the aspects of option trading. I even dive into my own trade results and play through the previous weeks like by day. I literally painstakingly go over the trades that I use. I've even used options in other types of markets. I've used cryptocurrency options. I've traded foreign currency options. I've traded options on futures and commodities. I have a full tool belt of strategies to help me understand the markets, any market, and find high probability trades so that I can create a profit. If you'd like to speed up or fast track your understanding of options and trade better, send me an email so we can have a call. So that's it for the topic of the week. The markets finished the week quite a bit lower, so all of our trades last week were bullish trades, and we know in advance that the results aren't going to be warm and fuzzy this week, so let's get to work. We'll start off with that cover call on AST SpaceMobile, symbol A as in Alpha, S as in Sierra, T as in Tango, S as in Sierra. At the time, the stock was trading for $29.04 per share. I looked at buying stock and selling the September 29 half call at $3.30, hoping for a return of 12.95% in 3 weeks. Well, shares of ASTS finished the week $2.93 lower, closing on Friday at $26.11 per share. The call spread that we sold lost 55 cents, leaving us with a net loss on the week of $2.38 if we were to close the trade out immediately. Now, my first thought is to roll the trade lower by buying in that call option and selling one with a lower strike. Doing this will also change the exit price you get for your stock. So I like to actually keep this stock while also ideally cutting this initial loss that we took on the week. So I'm looking at buying back that 29 half call and then selling the 27 half call at $3.10 which might be a bit better solution. We would recoup enough option premium to offset our full loss that we had for the week, and we'll also still have some room left in the stock to get a little bit of additional value there if the stock moves higher and ultimately takes us out of our trade. Of course, if we're left with the stock after expiration, that's great because we'll be able to sell another option against it in the next month, which of course increases our overall profit even more. So that's a win-win. Make sure you understand, of course, how the risk shifts with any adjustment. Next up, we have a credit spread. We looked at VF Corp, symbol V as in Victor, F as in Foxtrot, C as in Charlie. At the time, the stock was trading for $18.20 per share. I looked at selling the 17.5 put spread at 18 cents, which could give us a maximum possible loss of 32 cents per spread. Well, shares of VF Corp fell 51 cents, ending the week at $17.69 per share. The out-of-the-money put spread that we sold is now at the money, and that stock price is 13 cents below our break-even point, which means ultimately we're justified in making an adjustment if we like. However, I'm not quite ready to walk away from this trade. There are 2 weeks left until expiration, and I still think this stock has the potential to pull a little bit higher again. So I'm going to hesitate on turning this short put spread into a short iron condor. The stock price doesn't have to rise too much more for this trade to be a winner again, which is, I know that because I keep track of the break-even point. So I'll track stock over the next couple weeks and definitely have a game plan for how to manage this trade, if it continues to go lower over the next couple weeks. Our final trade from last week was a debit spread on the VanEck Vectors Gold Miners ETF, symbol G as in golf, D as in Delta, X as in X-ray. At the time, the stock was trading for $38.60 per share. I looked at buying the September 38.5 call spread for 32 cents, which could give us a maximum gain of 18 cents, or that would be a 56.25% return in 3 weeks. Well, shares of GDX fell $2.28, closing at $36.32 per share on Friday. The in-the-money call spread that we bought is now significantly out of the money. We are well below the break-even point, so an adjustment is definitely in order. I would look to flip this into a credit spread and then create an iron condor out of it. So I would sell the 38.39 call spread at 15 cents, allowing me to recoup nearly half of my loss. And remember, we're focused on that 32 cents loss number. That's our possible loss on the trade. So I would then consider selling the 35 put spread at 11 cents. This would lower the overall loss on the trade to 4 cents in the near term. And we'll still have some exposure if the stock price drops below $35.50 or if it rises above $38.50. So remember, do the math on these adjustments just to make sure you understand the risk of the new position before you ever make an adjustment on a trade like this. All right? So we're only 2 weeks away from September expiration. So this will be our last week using the September 20th expiration date for monthly options in September. So let's go ahead and get into the new trades for this upcoming week. We're going to start off with the cover call on NIO Inc., symbol N as in November, I as in India, O as in Oscar. The stock ended the week at $5.03 per share. I'm looking at buying stock and selling that September 5/2 call at 11 cents, hoping for a return of 11.53% in 2 weeks. Well, you enter this trade by buying stock for $5.03 per share and selling the September 5/2 call at 11 cents. This trade makes the most money if stock prices finish above $5.50 per share. The break-even price is $4.92 per share. In real terms, the stock purchase will require $503 and you'll collect $11 for selling the option. Next up, we have a credit spread on C3AI Inc., symbol A as in Alpha, I as in India. The stock ended the week at $21.29 per share. I'm looking at selling the September 20.5 put spread at 17 cents. That could give us a maximum possible loss of 33 cents per spread. Now you enter this trade by selling the September 21 put at 70 cents and concurrently buying the September 20.5 put for 53 cents. This is a credit spread because we're selling the spread, and this trade makes the most money if stock prices expire above $21 per share. The break-even price is $20.83 per share. In real terms, you'll receive $17 per spread that you sell and have $33 at risk. Our final trade for today is going to be a debit spread on Delta Airlines, symbol D as in Delta, A as in Alpha, L as in Lima. The stock ended the week at $42.04 per share. I'm looking at buying the September 41.5, 42 call spread for 32 cents. That could give us a maximum gain of 18 cents, or that's a 56.25% return in 2 weeks. Now you enter this trade by buying the September 41.5 call for $1.69 and concurrently selling the September 42 call at $1.37. This is a debit spread because we're buying the spread, and this trade makes the most money if stock prices expire above $42 per share. The break-even price on this trade is $41.82 per share. In real terms, you'll pay $32 to enter the spread, and your maximum gain is $18 per spread. So that's it for the trades on this week's show. Thank you guys so much for listening. Thank you for watching if you watch this on YouTube. Thanks for sharing. And as always, thanks to all of you who emailed me. For those of you who I didn't get a chance to get back to, I'll focus on that today. And so you'll hear back from me soon. All right. Have a wonderful weekend. And as always, happy trading. Thank you for listening to the Weekly Option Podcast. Please subscribe to our show and visit us at www.theweeklyoption.com. Disclaimer: there is a very high degree of risk involved in trading. The indicators and strategies described in this podcast are for educational purposes only and should not be construed as investment advice. For our full disclaimer, visit our website at www.theweeklyoption.com.